Good morning, everybody. Cool. All right, we'll see what we get today. Oh. Cool. All right. Where are we at? Inside consolidation. Classic. Love that. Pretty much holding the new day opening gap. I'd rather see if we can't get up higher, actually. Did we run this high out? Nope. Equal highs. So that buy side there will be nice. First percentage held, we run lower. So honestly, at 10 o'clock, I would expect if we can run out these short-term lows, try to hold the first presented. Pretty much a minuscule opening gap today. So high impact news at 10. For us, we're not going to do anything until then. Let that come out first. As you said, I'd like to see if we don't want to make a run up for this high potentially here. Keep up the seek and destroy. Or we create the high, we create a low, create the higher high, lower low, we have the higher high before that. All right, we fall short of this actual external range. 15-minute. So right now we are just holding at the 15-minute. But if we're going to be bullish, we can expect that consolidation. And then at 10 o'clock, as we said, we'll look for a run lower, followed by the release to clear out these equal highs up here. be right back before we open up. All right. So we have a bearish fair value gap. Ideally, we're probably going to use this now, this bearish fair value gap, aligned with the first presented inversion to run lower. So if the idea is we want to see longs this morning, what we'll look for is whatever kind of move we get at 10 o'clock, right? Ideally, it runs lower first, but then we want to see this bearish fair value gap here get inverted. That'll get us back above first presented, back above the actual bearish fair value gap, back above an old swing point as well. One minute. Let's see what we get. Because we pick up the short-term low, we might just go up first right away. Especially if this candle here tries to close back above the first presented. Maybe use as immediate support. There's the high perfectly, as we said. We want to see it go lower first. Okay, nice. So there's that sell side we spoke of. Delivering into another new day opening gap here. That's all it's returned into. So I mean, right, once again, perfect delivery into the high, the bearish fair value gap, trades into the sell side. As we said, from this point, if we want to see higher prices, we want to get back above today's first presented and actually invert the bearish fair value gap that just held price here. So we'll see if that plays out. NQ didn't clear that low either, so maybe having a potential SMT here to start the morning. Look at it like this here. So we hold that range. That's what we'd want to see for a liquidity run. Now, as we said, we'll see if we leave first that bearish fair value gap here that was created at the 10 o'clock candle. If we do, we'll then look for that to get inversed as well. If price made its way back below this wick and closes below this new day opening gap here, we would actually look for a continued bearish move. So we have a higher time frame 4-hour here. Let's see, the 15 minutes aligning some. What's that first from? First weekly, okay. So here's the 15 minute within that first presented. closure below the low like this would lead us to believe it's going to try to use it as resistance. If we want the price to get higher, we're going to have to try to close back above that. We look for price to close above and then respect the first presented here. If we're going to go bearish, however, right, the candle bodies will get held below this low. It'll try to actually close back inside of this first presented here. As we said, NQ, for the time being, we have SMT there at the lows. If we can maintain that, we left the bearish fair value gap, so we'll look for this inversion. Right, first we want to get above the actual sell side, purging and reverting that liquidity. If we could leave this volume imbalance open, that'd be even better. It'll give a discount anchored to that sell side. If we close that in, that's more bearish, kind of as we talk about there, negating the bullish discount. So as we trade into the 15, we'll look for that reaction here, see if it can't be sensitive, hold price, close above the sell side, use the sell side now as support to then send it into the actual inversion. Equal highs up here. That'll be like the target, ultimate target for this morning, if we can get up there. Relative equal highs in NQ. We're looking at this fair value up here in NQ relative to where we are in ES. So using the fair value gap in NQ because we didn't clear the low, using the liquidity here in ES. As we said, a closure below 15, we'll look for that continued bearishness to continue. At least for, let's see what we have here, 15. We could probably reach for the 4-hour midpoint. Hourly, we do have an hourly fair value gap below here. So a few more objectives, 4-hour. Okay. 1-hour inversion as well. So 2 different levels. We just picked up this short-term low, so we're going to see how do we close. Closure below this first presented of the week. Right, this is a weekly first presented fair value gap. This candlestick closes below that. That'll tend to try to use the first presented as resistance. We did open with the bullish volume imbalance, however, right on that level. So we'll look to see if we can confirm this closure below. Right, we'd like to have 2 candles do that, especially as we open with the bullish volume imbalance. We'll try to see, or ideally the 15-minute will try to hold the body, close below the first presented level here, which would send it into, right, these objectives. So there's the first one. Nice. NQ closes below first presented, so we'd also expect that to hold and send it lower now. NQ and ES should both fall. See if NQ can actually get this low. Same idea now. So if we're going to get underneath the 15-minute, as we trade up into that, we would expect that to be an area of resistance. This level here is the hourly fair value gap below. So once again, this also could offer us short-term resistance. Perfect delivery into, this is the inversion 1 hour, so we'll see what we get now. If we're going to maintain the bearishness, 15-minute fair value gap here should hold. Right, same idea, we create a wick, we trade below that wick should try to hold price and create another bearish move if that's the objective. If we can reclaim the 15, right, we may be able to start looking for the longs here this morning. If we want to see longs, we want to leave this volume imbalance open. We want to see that remain open as we close above the 15-minute midpoint. We then want to see this get inverted here. So we have a bearish fair value gap inside of the 15. If we can invert that, that'll also be a good sign for the potential run higher. Let's set this 5-minute close. So we're gonna let this 5-minute close real quick. If we're above the 15 still at that point, we would expect that to offer us support. So we closed above the 15-minute here. One thing we speak of is if we're gonna do this, close above inefficiencies like this, we open with the bullish volume imbalance. If that gets closed in fully and we close back below the 15, that would lead to this low being targeted next. All right, because we've actually been able to close above the 15-minute, but then we immediately give that back. That's a signature we've been talking about recently that'll lead to short-term reversals from the intended direction. So like if we were to close back underneath the 15-minute at this point, I would expect, right, a quick attack of this low. And then from there, we'll see if the 4-hour midpoint becomes target. We got closure below the 15. So unless this 1 hour can hold us, right, this 15 will be used as resistance to attack this short-term low. As we said, this level here is also a 1 hour inversion. So both 1 hour fair value gaps. Pretty choppy here in NQ as well. As we said, for me, I'm favoring longs. We'll aim for that. We'll follow it short if it continues to deliver lower, and we'll just kind of follow it without being involved. Ideally, we try to use the higher time frame inefficiency to support price right now. That's what these two levels here are. So I'd want to see 2 candles to close above this 15-minute. All right, first one, we negate that. Second one, if we can get above, we'd want to see another one to confirm that, ideally getting above the actual original sell side low here, which is the 4-hour high, right? So all kind of aligning. We want to get above the sell side, which will get us above the 4-hour, back into this range, and allow us to reach for higher prices. Admittedly, I would like to see this low go a little bit lower. It's perfect delivery, so that's fine. We're going to invert this fair value gap again. We'll see if we get closure above. Like the 5-minute held the wick. 15-minute has another 5 minutes, so still some time. If we can leave an inefficiency here, that'll be good news for us. So as we leave fair value gaps, we want to leave inefficiencies. If not, right, just more choppy. So once again, we know inefficiency left. We could still hold that, however. Admittedly, this type of delivery I don't really like to see. Okay, when we create lows, we don't clear the lows and we start stair-stepping, as I call it, because that will lead to very easy low resistance liquidity runs lower to pick up that liquidity. So if we're going to start delivering like this, we either need to try to run out a low and then displace higher, or if we're going to hold the 15, we need to get quick displacement to actually move away from these lows. At this point, I'm watching pretty much midpoint of the 15. As we said, we wanted to see 2 candles close above and respect the 15. Once again, no candle or no wick to the upside. We close above it, no wick to the upside, right back inside. We close above it, no wick to the upside, right inside. That's showing an unwillingness for price to actually want to release. So we just require more. Because at this point, low probability that this 15 will try to hold. So we'll look for a short-term or run on a short-term low one more time. So we just picked up the short-term low. If we can actually hold the 1 hour fair value gap, we'll look for the reversal. If we close below that, we'll look for this low to be hit as well. Closure below both of these levels, we then look for, as we said, midpoint of the 4 hour. NQ has already cleared all the lows. So honestly, this low here, I wouldn't mind if that was all we had to do. If we want to get this low too, that's fine. NQ is looking to reach for the actual low that it's created so far. We have closed below, so watch this level here. At this point, we're looking more bearish. As we said, that 3 drive stair stepper pattern higher creates lows that can easily be targeted. So as we retrace into the 15, we'll see if that becomes the area of short-term resistance, as we've now closed below this actual fair value gap level here. 15-minute will lead us to run out this low here. Once again, from there, if we do run that out, because we are favoring higher price delivery, we'll look for the inversion play, or just a YouTube model. So whatever forms any type of long here. We're respecting that level. We would expect that to happen again. So bodies should probably remain below. This is the hourly. Let me just show you once again. So we have the hourly fair value gap here. And then we have the hourly inversion fair value gap here. This will be the first time this hourly inversion has been tested, which is why I'm saying we can actually hold from here. Because if we notice, when we get above this, this is the first candle to close above. We haven't got any retracement. This is the first retracement into that level. So ideally, we hold that and hold the actual 1 hour here, which will cause that release. As we said, waiting for the 15, we got about 20 seconds. Ideally, the 15 will try to close inside this 15-minute. If we close below this 15-minute fair value gap on the corresponding time frame, I would look for actually a run into the 4 hour inefficiency midpoint here, because that's going to act as now an inversion level. Yep, so we did close. So now the 15 has officially closed below this 15-minute fair value gap. To me, that's going to lead these equal lows to be targeted. Notice how we're kind of creating relative equal lows there. So as we trade up into this 15 for the first time, following the closure of the 15-minute candlestick, this is where we'll see, right, that being used as a potential inversion. Oh yeah, that's on NQ. So here should be pretty important. If we truly want to take these lows, we should hold this 15-minute now with the bodies. Ideally, it's going to wick into the 15, and it'll actually hold this 1 hour low. So we'll see the wick do the damage of hitting the 15-minute inefficiency, but the body will respect the higher time frame inefficiency, which is this 1 hour, which will then cause that run lower into the lows, just like that. Closure below, perfect. So then once again, we would expect that release into the 4 hour midpoint. If the 15 has officially closed, notice that only after the 15-minute closes below the 15-minute fair value gap do we then get the run to clear out that low. So time then price, as we often say. At this point, it's all pretty much immediate rebalances. So if we're going to have like efficient delivery, right, this up close candle should hold. With how we're delivering so far, though, we could see another retracement into the 15. So we could see another wick up into that. If we want to be very precise, this up close candle, this high will not be breached. But with how we're delivering and consolidating at the moment, we can allow for the 15-minute up here. As we said, 4 hour midpoint becomes next objective. That's here. Keep it a little bit cleaner. No problem. No problem, trades. 42, you're saying, like, can we go to 42? Yeah, potentially. So as long as we're holding the 15. At this point, 15-minute here becomes our flip point. Okay, closure below. That becomes an inversion level. That'll send us into the higher time frame midpoint here. We have a lot of lows in here as well. So if we do want to pick up liquidity, we'll grab some real quick. Equal lows here as liquidity. So a few different areas. We have the actual sell side, and then we have the 4-hour midpoint. If the expectation is we hit consequent encroachment, we should also expect to pick up the low just below that. As you said, if we're going to truly respect price delivery, this candles here will be respected. The high will not be breached because we've already immediately rebalanced. This wick here that runs out these highs will hold as the protected high until we deliver into first consequent encroachment and then sell side. So far this morning, just bearish, right? We're following it easily. Same idea. If we're going to stay bearish, closing below now the 1-hour inversion high, up close candle should hold price. We actually have a hidden volume imbalance in here as well. We open with a bullish volume imbalance that creates no wick to the upside and immediately runs below the lows. That's a very bearish signature, which is why we would expect to see pretty much this down close candle be respected. At the same time, NQ is closed below the lows perfectly, right? And that's going to be an area as well that'll send price lower. So looking for lower delivery in both of these coming off this up close candle here. That's an immediate rebalance. All right, so we've rebalanced into this candlestick's low. So if we want to run for this low, this candlestick will remain bearish. It'll close below that level. And then the next candle should make a run for this low once again. Honestly, this will be a nice candle if we can get above that. So if we can actually respect order flow as we're speaking of right now, maintain this level, run out this low and deliver into these objectives, and then displace above this candle, that'll be a nice candle to look to or anchor longs off of. If we do it now, we'll have to be a little bit more wary of that. I'd want to see these higher time frame areas be delivered into. Close above, notice how we immediately open with the bearish volume imbalance, however. So that to us is a bearish signature again. Right, trying to break above the old level, but then immediately rejecting. That would lead us to believe we should be able to actually clear this low now, hit the 4-hour, and then look for the sell side. From there, so far with this delivery, we've ever really since this high, it's been higher lows, right? Higher lows, higher low. We did run out that barely, but higher low here, higher low here. That'll lead to a pretty easy run on buy side if we do want to release. So if we're looking for longs, I don't mind seeing this type of delivery lower, leaving untapped inefficiencies and swing points. I'm just debating. I don't even know. I don't know if we actually want to run this low out. Yeah. I would actually expect if we're going to hit this level now, I'd like to see if we can't reject from here right away. So if we do want to pick up these equal lows, I'd like to see if this low can't be held. That retested this original consolidation here. But that's the manipulation move into that. So that should be a protected low if we can pick up these equal lows here. There's the 4-hour consequent encroachment. We'll see if we can get the actual sell side. If we displace through the sell side, close below it, my idea of running higher will probably be offsides. And we're going to try to just continue to attack lows on a higher time frame. right, we might actually start getting a breakdown on a higher time frame. So there's the sell side. Now we want to see what kind of reaction we get here. As we said, closure below that, that'll actually lead us to believe we're going to continue to run. And we're going to try to target like this low. So from here, pretty much, if we're going to see longs, I'd like to see this be like a swing low. And then start attacking highs, start creating inversions, areas that we could look to long off of. First of all, we would need to get above this level here. That's kind of the first target. The inversion. Because right now we're inside of the hourly inversion. So that is going to be an area of resistance that could lead to lower delivery. If we want to be correct in our thoughts, we want to try to get above that so we're actually closing back above the inversion, which will allow it to become an area of support once again, especially after these runs lower. For right now, though, this looks like a slow grind, slow bleed low. Closure below, as we said, sell side will not be technically favorable for us, so we'd want to hold that range. Can we hold it? Closure below, bearish volume imbalance, not a good sign there. This is kind of where I'd want to see premium start being negated, though. So if we're going to create the bearish volume imbalance, and the idea is we run higher, we want to see 4-hour consequent encroachment and the original sell side being disregarded. Because right now, if we're going to really continue bearish, it's going to actually leave this open. So if lower prices is the objective, it's going to use the 4-hour midpoint and now this old sell side level as an area of resistance. It'll keep this volume imbalance open and create a pretty aggressive sell side move lower. Kind of like we're seeing here. And notice, as we said, really no inefficiencies since, what, leaving the 15. So since we left the 15-minute for the first time here, closed below it, no inefficiencies have been created. All efficient delivery lower. So when we have this type of delivery, it's pretty easy to follow because it's just respecting key algorithmic levels. Right, as we said, if we leave that open, that's going to be a pretty bad sign. So now we're going to have a premium aligned with old sell side. That, once again, if we're going to continue this slow delivery lower, that'll hold as resistance. If that holds as resistance, we'll look for this low here. As we're saying, once again, testing this. That's cool to see the wick, but we're not really convinced we're going to reverse unless we close above. This all could simply be another wick, especially if it holds that volume imbalance. That's like worst case scenario. Yeah, that's terrible, actually. So from here, we'll expect this low to be targeted. Just a slow bleed lower. This would pretty much need to maintain no wick to the downside. But yeah, with that rejection, right, off sell side, off the 4-hour, very obvious rejection. Next candle will run this low out, probably attack this low here. There's the low. So the slow bleed continues. We're back inside the original consolidation here now. Within this, like, it's really not nice to target anything just because it's jumbled, right? So we use the time-based PD array, which will be the new wick opening gap. So within all of that consolidation, we have a very small new wick opening gap. That'll be the draw if we're going to continue this delivery. So far, as we say, just respecting all the premiums, really. Closure below the low. We'll look for the new wick opening gap down here. Continue bearish delivery. What up, Sharky? Lacking on the chat. My fault. We leave an inefficiency there perfectly. Yeah, we'd expect that to just continue. Well, at this point, as we said, all premiums are holding. No inefficiencies. So if we actually do create one aligned with sell side like that, we should see that try to hold price. Yeah, we'll watch here. But that inefficiency is perfectly created with the old sell side. That is not random. Especially after we created the bullish volume imbalance. Right, so we open with the bullish discount. We trade into the premium that holds us and rejects. Very next candle displaces below the low, leaving the inefficiency. Right, that is what should hold price if we're going to deliver into new week opening gap here. Same thing in NQ. Right, that's the first kind of fair value gap created in this whole price leg. So if we want to continue lower, we should try to hold an area like this. If we want to start flipping, we'll try to close above and respect it. So we'll see what we get. Still favor the longs at this point though. Let's see, 5 minute. What's our 15-minute fair value gap? Oh, I deleted my fair value gap. Shoot. Oh well. We have a 15 here. Okay. So if the 15-minute, how many minutes we have? Oh, 1 minute. Perfect. So in the next 30 seconds, pretty much, if we can get back above this 15-minute here, this may be the low. And we can start the bullish move. Because right, we'll still be holding the actual 15-minute there. So we're waiting for that 15-minute closure. It does. Holds above. It actually holds that sell side as well. And this low. Okay. So that's pretty bullish. We closed above 4 hour here, but we need 2 candles, right? 2 candles to truly confirm, because this one candle can negate this candle closing above. As we retrace into the 15, we'll see if that can hold price now. Right? It'll be pretty much a wick on a 15-minute candlestick. 1 hour candle, all bearish, which is why I still favor a run up here. Because if we notice, right, this 1 hour candlestick has no wick to the upside. Very rarely do those ever get left untested. Let's move some of these. So we had the volume imbalance. I'm really worried about the original sell side and the 4 hour consequent encroachment. So once again, that one candle negates the previous candle's action, closing back inside the range. We'll look for this here to help. As we said, that's original sell side there. But as we often speak about, seeing us leave some type of inefficiency close above and then immediately close back inside of that will lead to, right, the reversal. So we do have equal lows here. We'll see if we can pick those up. Reach into new week opening gap. Simply returning into 4 hour, right, on a higher time frame. It's simply a wick into the 4 hour inefficiency. Yeah, long, not quite yet though. As we said, we don't stress that here. We've picked up a low. If we can hit new week opening gap and then get above, that'd be good. This is a case where you don't really want to try to hop in front of it too early. It's easier to wait for a true break in structure. Sometimes you don't need the break in structure, but when we have a day like this, where it's very one-sided, waiting for a break in structure is pretty much always, right, a very smart idea. Because if you notice, right, we really haven't broke any structure at all since 9:48. It's all been to the downside. So now that we've picked up this low and this low, we'll see what we get here. $10.30 now, so the morning range has been put in place, and we've actually cleared the morning range low. So usually that'll actually tend to create moves in that continued direction, right? This was the morning range low here. We closed below it. Oh wait, did we close below it? We didn't close below it, but we traded below it. To me, that still leads me to believe that sell side has some more room to go, right? So this new week opening gap we'd look for. Once we do that, then we'll look for the reversal. We'd want to see pretty much like this sell side and this bearish fair value gap hold, deliver into new week opening gap. We then invert that fair value gap and find support in the sell side if we're looking for the reversal. May want to actually reach for that half standard deviation as well. So you take the daily range, these are very specific levels in price, half standard deviation. We could see price try to retest that actually. Because that level is actually right below, oh yeah, that makes a lot of sense. So we'll probably look for that if we're going to maintain bearishness. So as we trade into new week opening gap, as we said, this sell side will hold us and clear a low one more time. We're going to trade into this new week opening gap. We close below that, we're going to look for the half standard deviation of the daily range, which aligns with equal lows from a past consolidation. Damn, Cal, you sleepy boy. I'm coming. Liquidity void, actually. So yeah, we'll look for that. Look at that hourly candlestick. Yeah, we can get that half standard deviation. We'll look for that. There's that new week opening gap. Very tiny area in price, but it's going to be very specific, right? It'll offer us dynamic support and resistance. Same idea. So as we said, if we're going to flip from here, we want to hold new week opening gap. We want to invert the bearish fair value gap that sent us lower in the first place. And we'll actually be closing above a swing high. So that'll be nice if we could do all that. If not, as we say, we'll just continue the slow bleed, leaving all the highs behind. Sometimes we get that. Right, yesterday was pretty much all bullish delivery. Today, all sell side. Back-to-back volume imbalances, to me, that's going to continue to stay open. So that stays open. We come into the half standard deviation easily. Yeah, we're just going to run straight into that. Okay. Another volume imbalance. So yeah, at this point, we're just going to run into that. Here we go. Should get that level. A trading sleepover. Could you imagine that? You just take it, you bring in like 10 monitors. You just make it to where they have to trade all night. Let's make it a competition. 24-hour. You have to place a trade in each session. Whoever has the most profit wins. That'd actually be hype. All right, there's sell side. I'm gonna be honest at this point. Half standard deviation. I'd like to see reversal from here. It's the old high as well. Okay, so we've retested an old daily swing point. We've cleared consolidation lows. We've delivered into a half standard deviation off of the opening daily range. We have a no wick to the upside bullish candle or bearish candle. Yeah, let's get higher from here. What we'd want to see another volume bounce. Wow. If we're going to keep doing this, we'll just keep following, as you say. That premium will stay open. We'll close below the liquidity for the first time. Close below the standard deviation level. And then just continue to dump. If that's the case, what else do we got then? As we said, we have an hourly fair value gap we can get into here. Very large hourly fair value gap. Which looks to be the objective, actually. Just bearish. All bearish. Look at that. Entry was here. Only real entry. As the 15-minute closed below the 15-minute fair value gap, leaving a 1-minute inefficiency aligned perfectly there. That's A+ setup. Let's move the 4-hour. All right, we'll see if we can hold that. So at this point, we look at the last premium before delivering into the objective. That's here. We see what happens as we get above that. Right, because as far as the PD array matrix, first thing we would look for, Smartman reversal, turtle soup at the lows. We would then look for inversion play to hold. Then look for the volume imbalances. Try to get above new week opening gap as well. Bias is bullish, yeah, overall. Going down to go up is my narrative. We'll look for new week opening gap here actually to hold and give one more stab into the 1 hour, especially if we hold the bearish fair value gap. We just closed above that. Closure above, notice where we open now. Volume imbalance on the high. So if we don't want to actually run this high, this volume imbalance here will respect this wick, and it's going to close inside of this or back below this fair value gap. We'll retest the original liquidity. And if it really wants to get bearish, it'll run these lows out. There's a short-term low aligned perfectly with that hourly too. So yeah, we'll look for that for sure. All right, look at this low right here. Sitting right on the hourly. Oh, we just got it. So as we said, right, that candle opens with the bearish volume imbalance, trades right below. There's the hourly. So we've delivered into the 1 hour fair value gap. Let's hide it all real quick. Always nice to just look at price. So in reality, okay, we're in a bearish leg. We clear this high, we run down and we clear this low. We didn't close below it, however. I wanted to see higher prices. This will be a pretty important 1 hour fair value gap, however, now. We close below midpoint of that, we're going to look for actually all of these lows to be traded. Midpoint of that is a first presented, and it's also overlapped with a daily fair value gap. Notice that. So actually, I would expect that to be, oh, let's bring this back. If this is the case, I would expect really just the continued bearishness, right? We're going to leave the fair value gap aligned as we trade into that. This fair value gap and this liquidity are the exact same level, right? The midpoint of it. That's not random. So we're very heavy today. We'll look for that continued bearishness. I'm going to run right into that. Well, so far as NQ dropped so far. NQ hasn't gotten to its hourly yet, so still has room to the downside, actually. Oof, well, there's the daily. Okay, so too late to enter on the high. Yeah, anyone trying to long right now is getting absolutely shredded. And as we said, for me, I held a bullish bias, but we could very obviously follow the shorts. So there's no need to try to forecast, or I guess jump in front of longs, unless I'm proven, or it's proven that we're going to start reversing. I think a lot of people think once you get proficient, you could trade up and down, which you really can. Right, as you see, we could follow price delivery. That doesn't mean you need to always be involved in every move, though. So because I did favor longs, we watched the shorts, but we kind of just passed up on them. Would have been nice. As you said, this was the entry point. And then this was the second entry point. So as far as entries, those were the only two entries I would have taken short following this price delivery. Very obvious. 15-minute with the 1 minute. Same idea here. Right, we run up, we displace back below the sell side, leaving inefficiency. Very obvious areas for entry there. There's the daily fair value gap. Let's see if we want to stay real bearish. Where's the one standard deviation of that daily range? So that might be a little ambitious. Daily, clear that daily high. We may want to get that low, actually. Just debating if we want to try to hop onto a short at this point or not. We'll look for the first presented of the week. So we'll see if we could invert. We really haven't disrespected a premium since, I don't even know when, really since this quick run up, but we still held the actual sell side. I mean, to be honest, we haven't really disrespected a premium at all today. So we'll just look for that to continue. Which means this fair value gap with the volume imbalance will try to hold price, deliver it into midpoint of all the higher time frames, right? So we have the daily, we have the hourly. Both of those are aligning with the first presented. That becomes a pretty obvious target there. So this fair value gap. Notice how this volume imbalance here that we've pointed out is aligned with the high of the daily. That's why it's important. Yeah, so if we're looking for the reversal, right, what we want to see, first we want to see inversions being created. So like we want to invert these premiums, because as we said, we haven't really inverted any premium so far on the way. So we first want to get above a premium, close above, and then use it as an area of support. Ideally, we do see a market structure shift. So as we were saying, this type of delivery, we really need to wait for a true break in market structure. As you said, there is that fair value gap holding, high the daily fair value gap, retracement straight into first presented. So we just expect bearishness to continue. At this point, we're not trying to hop in front, right? Price is obviously heavy. It wants to continue reaching for lower prices. Only way to confirm a reversal is for a true break in structure. These type of deliveries, I'm not trying to use inversions or anything like that, because they very easily get traded back on. So from here, we'll see if we hold that. That's daily fair value gap's midpoint. So we've pretty much retraced all the way into a daily fair value gap here. Closure below this daily fair value gap, we'll look for this continued sell-offs, right, into this one here. First presented of the monthly. Like at this point, if we can actually get below or above these highs, that might be the reversal there. If we want to stay bearish though, we'll leave the bearish volume imbalance open. We'll use the bearish fair value gap that gets created here, and we'll just keep on selling off. Look for the low of the daily. So we leave that open. As we said, we'll expect premium to hold us and create another bearish leg. No need to try to work against that. If we close above and create an inversion, cool. But then we'll have to see pretty much displacement above the highs for the market structure shift. But for the time being, right, we would just hop on board with shorts, short the fair value gap, look for a run lower again. Yeah, so seeing how that holds, right, I mean, that's perfect. We would expect that to be a swing high, run back below. At this point, we close below this first presented. It should hold as resistance. And we'll just keep selling off as we expect there. Okay, make an attempt. We closed above midpoint, but once again, notice what happens. Bearish, volume bounce right back under that. That's bearish. So if this holds underneath, closes below, we expect a run on the lows and the bearishness to continue. As you said, this here is a weekly first presented fair value gap. So the fact that it's that and it's paired with a daily midpoint, this is where we could see price try to start making some short-term moves. Right, try to return into some of these highs on a higher time frame, right? All open inefficiencies. Even on a 5-minute. There's only been 2 up close candles in this whole price leg. We have a 5 minute as well with the volume imbalance. That's why we say we ideally need to get above this. Because even if we left the daily fair value gap, right, we're going to hit these premiums here. So if price is heavy, it's going to respect that. But I like the idea of trying to get a reversal. $10.53, so a little macro time. Retesting high the daily. Let's see what we get from here. As we said, ideally we close above this high. These equal highs and the actual fair value gap would be best case scenario. What's good, Dark? We doing good, brother. Just watching the absolute dump here. That is a volume imbalance, and it's a new week opening gap. For some reason, it doesn't show up on the 1 minute. But that's why I'm saying we need to get actually above and outside of that. Right, because right now the new week opening gap, volume imbalance, 5 minute bearish fair value gap, high the daily fair value gap, those are all going to be premiums that are going to try to hold price and create another bearish leg. We get above that, we flip that and close above all those levels, then we could start looking for the longs. But still, right, even in here, not trusting it. Like we said, I don't really like inversions when we're delivering like this. So this would be valid if you're trying to long an inversion. But when we understand that price is very heavy, inversions don't hold. Hardly ever. Instead, what you'll see is we invert it, and then we immediately reclaim it bearish and close back below. That's why inversions can kind of tear you up, right? If you're trying to use them in very one-sided market. Inversions are better if you're either in consolidation or you're actually reversing. Even as we said, highs don't want to get broken. So we can't even clear equal highs in this whole leg. Right, the only highs we've cleared are this one short-term high. And even this run, right, that's not really the high of this current leg. This would be the high. So we've really cleared no true dealing range highs. Nice, Dark. I like it. Respect. Well, what's up, my guy? Like if we're trying to get 5 handles, what would that need? Okay. So we don't mind that. We like that. Holding first presented. We'll see if we can reclaim the fair value gap, close above. Once again, I'm never a fan of like one singular swing low for reversals. Like when we create reversals, I always like to see another low being ran. Because this type of delivery leads to, as we say, very easy low resistance. If we only have one low and we're trying to reverse, that could lead to very easy runs of that low. I would almost expect at this point we run into this bearish fair value gap. Maybe it's midpoint. That holds us and then sends us back into this first presented or into this low. From there, I would like a turtle soup on that to then look for the reversal again. There's the fair value gap. If we can close above, then we may be able to use the daily as support. As I said, my expectation though would be this is simply a run on stops. It's going to try to respect this and then create a bearish leg that runs into these equal lows, retesting the daily or the first presented here, especially if this candlestick closes inside of the daily fair value gap. We did close below the range. Notice bearish volume balance opening. We'll expect that, as we say, to create bearish movement. If we can negate that, however, close above, really close above this fair value gap, then we may be able to start running. Okay, make an attempt here. We'll see if the 5-minute can close above the 5-minute volume imbalance, also closing above new week opening gap here. If we're able to close above, then we might start seeing some release. This high would be nice, new week opening gap. Swing high aligned perfectly there. Five-minute candlestick. We are retesting the 5-minute inefficiency. How do we close? And we open with a bearish volume balance. So still not really convinced yet. I still think this will create a bearish run. As we say, very easy low resistance liquidity run here. So we'll look for retest of really the first presented fair value gap. Okay, yeah, so that's delivering pretty much how we would expect there. I think we retest the daily midpoint. So because of this delivery, my expectation would actually be, if we truly do want to try to create a short-term run higher, 3 drives higher here, run out these lows, and retest the actual daily fair value gaps midpoint. And from there, then try to create a bullish leg. So that's the 3rd drive higher from this low. Yeah, I'm still not convinced. Did NQ get that? It did not. Chart colors are... What are my chart colors? There you go. F4DDCE. Whatever that means. And then the candles are just black and white. From here, really, this is the flip point. We did close above this inversion. That's nice. But this fair value gap here is really kind of the true flip, because that'll be the higher time frame. So we had an old liquidity pool. We have a bearish fair value gap and a higher time frame inefficiency. We can get above all those, then we should be able to release a little bit. From here, we would actually try to see if this inversion can't hold in the short term and just create the bullish run higher. Yeah, you want to at least, you want a higher time frame ideally, right? Especially in this type of delivery. So if we can get above that, then on a higher time frame, 5 minute has about 2 minutes. If we were trending, we would expect something like this to hold us. We don't trust it fully just because of the delivery so far and how bearish we've been. If that stays open while the next 1 minute candlestick closes and the 5 minute closes above and outside of this inefficiency, then we may be able to trust that. No, so we reject right from that level, just as we kind of expected there. That's going to be a very key area. What we want to see pretty much, so it is going to close, the 5 minutes going to respect that, so we could still actually go bearish. What we would need to see is this fair value gap hold price, close above the inefficiency, continue to run. As we say, when we have this type of delivery where we just create one low, stair step our way higher, we really need to see a quick displacement away from that, so it's not tempted to clear out these lows. Because right now these lows look a little too clean. We could easily fall back below, inverting this fair value gap, run for these lows. What time is it? Ooh, 11:05. All right, we'll give it about another 5 minutes, but we'll pass kind of our trade window. We'll wait till 11:10, see what we get. As you said, looking to get pretty much above this fair value gap. This becomes our flip point. We get above that, we should be able to release into new week opening gap. Some of these other, let's see, swing high. We'll only include one swing high. This is the next swing high if we want to attack some buy side up here. Wait for closure above though. Closure above leads to expansion. Look at that rejection. That is why you got to wait for the closure. If that becomes swing high, we'll look for this to get inverted. Attack those lows that we were speaking of here. Now, once again, notice how the midpoint of this bearish fair value gap is perfectly the old low. That's why this is a key level here. Also created as we entered the 4 hour for the first time. The high of that is also midpoint. So they're all the exact same level, which is why we're saying we get above that level, we should be allowed to release into some short-term highs. closure on its high. So especially after seeing a wick like this, closing above its high would lead us to believe midpoint should be now the new area of support or the low, ideally midpoint. So as we watch this, right, and the candle continues to retest this midpoint, we want to see that offer support there. Body should not close below that, should hold that, close above the actual fair value gap, then leading to a release that can target highs. We do have this, so that's still going to be an issue, right? That's also sell side and inefficiency. So we're continuing to, we have to get above all of these premiums. We can expect hesitation, but eventually we want to see price close above. This candlestick could not. So it did respect midpoint like we wanted to see. It then trades into the premium perfectly and then closes perfectly on the high. Still want the same idea now, especially because we've opened with the bearish volume imbalance. So if the idea is we're going to try to get higher, we need to close in the bearish volume imbalance, respect this discount here, close above. About to be 11:10. Higher time frame, 5 minute is here as well. Right, so the high of the 5 minute is also the high of the 1 minute, which is why I just have the 1 minute. If this candle closes above, that'll be the 5 minute candlestick inverting for the first time. Then we may see price try to move higher. But it does not want to, will it? Has to have a quick rejection. Nope. Matter of fact, it's going to close at the low. So 5 minute once again has respected that. It's respected the higher time frame. As we said, that'll lead me to believe we're going to run lower from here. So we'll see if we hold this inefficiency. If we can hold this inefficiency and then get above, that will actually be fine. And we'll look for a long off that. We get below that, as we said, we'll look for these lows here and the daily fair value gap to be retested. Five-minute BPR. I wouldn't necessarily call this a BPR here. Ideally, you want them to be overlapping the same range. So like I wouldn't trust this to hold as a BPR would. This little inefficiency. Matter of fact, we just closed below that. So yeah, as we said, I'd rather see this be used as an inversion to run out some of these lows, because now once again we're just creating that stair stepper. Low, higher low, higher low, higher low. As we say, this is kind of when retail wins. You buy the trend line or whatever. We want to see that get cleared though. Retest the midpoint of the daily fair value gap. At this point though, if we did get back above and actually close above, because we've been able to close above the flip point that we've been talking about here. If we can actually close above that after respecting this daily fair value gap, then we would trust longs from up here. Early on, we don't really do it because we still have these lows. But if we're going to make an attempt to attack those lows and get stuck at the daily and then displace and invalidate old premiums, that's going to be pretty good for a potential run higher. So already we're looking at this potential bearish fair value gap. Right, if we want to run lower, we should try to hold that. If we invert that, that'll have our attention. As I said, we hold that perfectly. If we invert that, we would expect that to offer support. At the same time, however, this could hold us. So closure above the bearish fair value gap isn't the utmost important. Closure above this bearish fair value gap here is more important, because this is the one that's going to offer us resistance if we truly want to hold and break lower. Right, we also had a 1 minute fair value gap in there as well. So right now, kind of competing PD arrays. Excuse me, sorry. 5 minute holds, 5 minute here, retest, okay. We'll see if we get closure above here. This will be the closure of the 5 minute, as we said. At this point, if we do hold the daily, we displace above the 1 minute, we can actually look for that to try to hold price now. We need to close above though. Ideally we close above this level as well. We close above all of it, so we want to close above the swing high itself, this swing high. As we said, this will be the 5 minute. Okay, so we got closure above. This type of delivery is just hideous though. But we'll look for one more bullish leg. As we say, sometimes retail wins, right? So we would want that low to hold. If we're going to retest this level, okay, so we're going to close above the old sell side, the fair value gap. If we retest that, this is where we would need to see pretty much large bullish candles to follow that. Because now, as we say, when we create this, I guess, channel is what they would call it, delivery, right, where you have the trend line, that becomes very easy trend line liquidity. So the longer that we spend in here, just kind of doing this, right, the easier it'll be to just run those out very quickly. We'd want to see instead to respect it and then displace away from all these lows and try to run higher. We'll see what we get. We'll close it up here about 11:30. So yeah, pretty much at this point, this would need to be a swing low. If we're going to respect this and hold the actual inversion like that, we wouldn't want to see much lower than that. We didn't close above the actual high, so I wouldn't trust it as much. This is what we would be like a high risk entry, because there's no true break in structure. It's only inversion plays paired with the 5 minute inefficiency. So it's less probable, higher risk. Had we closed above this level, as we mentioned here, then it would be a lot higher probability. So you can enter on the inversion, but we have to understand that that is going to be a lower probability entry, right? It wouldn't be an A+ as we classify. You still would want to see a true break in structure. Closure below, we would expect that to be an inversion now. We reclaim the bearish fair value gap. That'll probably hold, send it lower. We'll see if we can get above this again. Yep, definitely. Been all one-sided this morning. Heavy. So as you say, we don't like when we're just continuing to do this stair step, right? It doesn't clear lows, which is nice, but if we can't actually close above, that becomes such easy liquidity to run. So like at this point, we would pretty much need to close above this bearish fair value gap and just push aggressively. Look at what we close. Can't argue algorithmic delivery, right? I mean, we close on this very random area. Yep, exactly. One candle's all it takes. In this type of delivery, right, this is where I'll say we use that to enter. As we trade back into break even, I'm just going to take some off. Because we're in a high resistance liquidity run. So there's no need to hold that much risk. And if we do want to release, we could still be involved. But this type of delivery, I'm not a fan of at all. Very low probability. So once you're in, you got to commit to the idea, but you don't trust it really in either way. I'd like to see us try to get this new week opening gap. Once again, beautiful respect right at midpoint. Let's see what happens. Retesting it. Do we get closure above? Again, perfect closure. Very accurate, right at the midpoint. Remember, as we said, this is a very key area. High of the 4-hour, old sell side liquidity, midpoint of the bearish fair value gap that delivers into the higher time frame inefficiency. We want to see this volume imbalance remain open, displace above these highs, hit these equal highs, and deliver into new week opening gap. That's our objective there. Don't want to see this low be targeted at this point. NQ looks a little bit more bare. Yeah, that's, I mean, these lows are way too clean here. Right, we've got to run out those lows. So notice, even as we try to open above, we close on it, we open on it, we close on that level, we try to open above it, nope. Immediately reject, close inside the range, that will lead us to believe it wants to target a low. Right, when we're inside consolidations like this, it will not try to actually leave that external range. Another pass for the low. Revisit the daily fair value gap here. We could run this probably low out, as long as we hold this low. Little turtle soup of that low. We'll see if we close above now. Yep, I'd agree. All of these lows still seem too clean. We close back below this, we'll look for that quick sell-off. Choppy, choppy. Okay. I think we'll be good there. We'll call it. At this point, we're just consolidating after delivering into the daily objective, following a large expansive moves. So expansion will lead to consolidation, especially when that expansion delivers into daily PD arrays. So because of that, we'd rather not. Might just sit inside of this. Free up some of your mental capital. So overall, just a bearish day. Right off the opening, we did want to try to get these equal highs. But we said that if we're going to close below the 15, that'll kind of flip our objective. So we noticed that right after the 15-minute candlestick closes here at 10:14, right? That is when the 15-minute candlestick closes. The very next 15 candlestick runs up into that as the inversion and then sells off. That would have been the entry there. So this is also the YouTube framework, right? We clear a short-term high, we hold a premium, we displace and close below a low, leaving a 1 minute. That 1 minute was aligned perfectly with the 15, and the 15 closed perfectly as well. So that was the A+ setup, targeting sell side or a new week opening gap. The target didn't matter, right? Entry there. Second entry would have been here. So as we close below the sell side, we make an attempt to get above, purging and reverting. That should hold it if it wants to remain bullish. Instead, we displace right below, leaving a premium aligned. That became the second opportunity. So from there, same idea, right? You could use either the sell side or just the fair value gap with the most recent swing high as the protected high to then get into higher time frame or at the daily that we're inside right now. So today, shorts were the play. If you wanted to get in before the news, right, that had an opportunity. But when we have high impact news, I always like to wait for the news to deliver first. Right, same idea. As we said, if we're going to create a large wick like this and close below that wick, that area in price should act as a giant premium. And that's what we see in here. So overall, just really bearish delivery. Pretty clean all the way down. Once we get into the daily, that's where we were met with the consolidation. And now it gets a little bit more sloppy. What up, Live and Breathe? Yeah, we're live every day. Not on YouTube as much anymore. Inside the Discord. Only on YouTube about once a week, every now and then. But yes, sir, we are thriving in the Discord group. But yeah, hope you guys found that helpful today. As we said, shorts with a play. For the time being, I still want to see a run higher now at this point. So I'd want this to become pretty much a sell to buy model in here. Because if we just look at this now, right, let's clear everything. Really, since this high was created this morning, we have a higher low, or excuse me, higher high. Then we have a lower high, another lower high, lower high, lower high, lower high, lower high, lower high. Right, we really haven't cleared any highs besides this, but we're already in the consolidation, so we're not really counting that. So we have a lot of buy side, a lot of open inefficiencies in here that price could run into. Admittedly, we'll probably consolidate heading into lunch, and then we would look for the afternoon to try to pick up some sell side before the true move. So if you guys are going to be here for the afternoon, I'd look for like consolidation. Coming out of lunch, I'd like to see it either run out lows or retest the daily fair value gap. And then from there, try to get above and start pushing for all of this that was left behind. Yeah, we'll leave it at that. If you guys would like to be involved every day with us, so I take a look at the Discord. That'll be linked in my Twitter and the YouTube. Not needed, but just there if you want some more confirmation, or if you actually want to see entries and exits and things like that. Yeah, until we talk again, next YouTube stream will be planned for next Tuesday. As far as the Discord, we'll be live tomorrow morning for all the Discord members in here. Let me double check news real quick just to see what time. So no high impact news tomorrow. So tomorrow will be a pretty normal day for us. We'll be on at about 9:25 Eastern, just before the opening bell, and we'll see what it has to offer. Until then, be safe, everybody. Have a great rest of your afternoon. And for those in the Discord group, we will talk tomorrow morning. Take care. Thanks, Cal. Love you too, brother. We'll talk later.